I'm going to make sure you look really great.
Looks nice, no?
Yeah, great.
Excellent. If you say so, it must be true. Good morning to you all, and very happy to be here. Everything has been said about tariffs and consequences and so on. So I am not going to put slides together, which I normally do when I teach international banking and finance at Columbia Law School, which I'm doing. I've been around the financial world. So what I'm going to try to do with you is just to talk to you and have your reactions, because I think we are in a very difficult situation for those who have to take financial decisions and economic decisions. So we are in fact in a deep uncertainty, mostly due to the US policy that has been taking some of our certainties upside down. Some of the things that we thought we could rely on no longer seem to be applicable. And therefore, we are all challenged as investors. It affects the United States, but it affects the rest of the world as well. So if you look at the situation, the confusion, the uncertainty, what I'm trying to do now is to take the flip side of it and say, where is the opportunity? Because any form of uncertainty contains opportunities that we might want to see. Yes, it increases the risks, but it increases them positively as it increases them negatively. There are some opportunities now that didn't exist a few months ago. And it makes our role as advisors and investors challenging, but I believe very exciting. That doesn't mean that when I take personally an investment decision, I find that decision process to be easy. The core of our work, and this is where I'm going to focus on, is not as asset allocation. I think that I am not, in my experience, and I have an advisor for that, I am not the right stock picker. I follow corporate because I was working in corporate finance, mergers and acquisitions. When at Morgan Stanley, Peabody, I run the international activities of the New York Stock Exchange. So I've seen finance from a number of angles. And therefore, when I take an investment decision, I'm trying to put what I've understood and heard over the last decades that I have been in this business. I came to the United States from Europe 30 years ago. I am originally Belgian. I'm also an American citizen. And as I said, I have been working in the United States for 28 years, actually. And the question that what we are effectively confronted with for the first time, and I see that so much here, but I see that abroad as well, is that the premises of the US supremacy as an investment place is being questioned, rightly or wrong. But that supremacy is the subject of a number of questions and a number of debates that you have been following. The tariffs are the core of the so-called economic policy of the current administration. And this morning, as I was coming here, I discovered something funny, which is that Donald Trump told the Europeans that they should put 100% tariffs on China and Russia and India, just because that would be a problem for Russia. So the reality is we are facing news on tariffs that change every day and different views, and therefore tariffs are not at this stage a fixed problem. It's a variable that changes all the time. The numbers change, the targets change, and so on. I'll give you an example. For instance, I've been involved on the Swiss media because the Swiss are very sad. Because for a number of reasons, Europe got 25%, but Switzerland got 39%. And the explanation is because they can pay for it. But the reality of the problem of, for instance, the pharmaceutical industry, which is very important in Switzerland and in Europe, and the impact on the US pharmaceutical industry is a major challenge at the moment. So I was advising the Swiss authorities not to spend too much time in Washington. I told them that what was more important was for the company, big companies, the big Swiss companies, the big European companies, to have a discussion with the US pharmaceutical industry, because they have a common interest here. And by the way, people like Roche and others on Switzerland are major players in the United States. Big operations in New Jersey and in other places. So I have tried to compact 5 characteristics of the tariffs that are impacting our view of the world and therefore our investment policy and our allocation policy. The first one is that, and I hope you won't take that too much as a problem, but it is arbitrary. And it is arbitrary both in size and country. Why on earth would we have 69% tariff on Botswana? Can somebody give me a logic? Why Switzerland has 39% and Europe has 25%? Why India now has 50% and nothing is happening on China? So we are facing something that is in size and in country. And I would like to say something that I strongly believe. Because it's coming from the government and because it's government policy, it is a strategy that is defined country by country. And to be very candid with you, I think that's the wrong approach. Europe as a whole is a number of elements of international trade. And it would be much smarter to talk about some tariffs, say, if you want to do it, on European cars or on European pharma or whatever, but not to the entire country, to the point where, as you probably know, because Mr. Trump has decided that there was a sort of possibility to send anything that was worth less than $800 could be sent without tax and without tariff. Now, if I want to receive a magazine from Europe, it will be taxed, even if it's a $25 kind of situation. Result, the post offices in Europe have decided not to send those packages to the United States anymore. But who is the winner of it? The second element is that it therefore threatens the price stability very unevenly. The impact on wholesale prices and on retail price and the impact on the consumer are creating an instability that means that we don't know what to expect. As I told you, they are looked at the country, and I still hear a rhetoric saying that this is paid by the governments of the countries, which is obviously not true. It's actually paid by the importer, and the balance between what the importer wants to do, what the exporter wants to do, and what the consumer will have to do has to be adjusted pretty much almost product by product, but at least in that way. There is a complete uncertainty as to the duration of the tariff, and therefore you can have an Armageddon view that it's going to be explosive. You can also have a more positive view of what is going on. But the reality is, I do not believe that after 6 months of the tariff exercise, it's going to stop. And we are going to see in the next few months other changes, other negotiations, and other problems. Therefore, we are living in complete uncertainty. What has been done is not final. And then the last thing I would like to raise, which is through 2 examples that I'm going to give you. The administration is using the tariffs to weaponize for political purposes. And some of their decisions is absolutely not motivated by international imbalances or international trade. They are coming from other. And I give two examples. The first one is Brazil. You know that the administration has increased the tariffs on Brazil. For what reason? Because they do not accept the fact that the previous president of Brazil might have actually been doing a coup d'etat, and therefore it's kind of a regime attack, including an attack on judges in Brazil that is totally political. And then, and because I've been very involved in India in part of my professional life, the situation in India is particularly worrying for the following reason. Because the administration wanted to hurt Russia, but they did not dare to attack Russia directly. They decided to increase the tariffs of India to 50% because they were importing oil from Russia. Now, that has nothing to do with the international trade of India. And what we have seen in the last few weeks is a change of mind. It is our strategic interest to try to keep a very strong relationship with India, because China is probably not our friend. And in Asia, it's important that India be at least in the middle, if not favorable to the United States and Europe. So the result is, you have seen the Shanghai organization in Tianjin, where all of a sudden the friends are putting Modi and Xi Jinping, and you want North Korea for the parade. And what you do there is that you are what the US has been doing diplomatically in the last few decades is to try to take Russia away from from Russia and from China. But we have to remember one thing. When India was created and separated between Pakistan and India, the United States were on the Pakistani side against the Indian side. So all these things have to be taken into consideration. So where does that leave us? To be honest with you, I believe that the need for research and analytics has never been more important. It is critical because we need to understand the impact. And if you just read the media, you can see everything and its country. So we cannot assume that the research and the analytics that we had before apply today. So the investment that has to be done to measure the impact and the ability of sectors, not just countries, to afford or pass the tariffs has to be seriously analyzed and in a more micro way than it used to be. The second one is that when I read what the financial analysts and the economists are writing, they seem to be lost because their ignorance of the geopolitical and macroeconomic movements beats their expectation. Some of the movements that happen in the markets have been totally unexpected. The third one, and this is something that I'm doing for a living, we need to think horizontally. We have been thinking very much in terms of, okay, this is vertically what is happening in pharma in Europe. But all those elements interact with each other. And therefore, we need to think horizontally to see whether what is happening in pharma might have an impact on chemicals. If it has an impact on chemicals, what is the impact on oil and gas? If it is on oil and gas, what is the impact on energy? And you go around and around and you start realizing that what is moving today does have a contagious effect on other sectors. The fourth one that I want to put here might be more controversial with many of you, so it's an opinion. It's my attitude towards innovation. I have been spending time in writing about the so-called financial innovations that have been done, let's say, since Bitcoin and all the way through AI and now the famous stable coins, which are, as we all know, not stable. So my concern there is that when you face innovation, whether it's in pharma, whether it's in technology or whatever, you have to go behind the screen because the rhetoric and the way they present themselves does not necessarily correspond to what they are. The example of stablecoin for me is fascinating. I mean, it's stable because it's linked to a currency, but since when is the dollar unstable, a stable currency? Yeah. And then you have to have the attitude and the impact on US Treasuries and so on. So those four elements are things that we need to do. And therefore, I have to be honest with you, your work and my work are much more complex and difficult than they used to. So what can we do in our search for some form of consistency in the current situation? The first element that I consider to be the most geopolitical threat is over-indebtedness. Over-indebtedness, the US debt has reached the level that is unbearable, and the beautiful budget or whatever is making it work. And it's interesting that very few people or very few media have talked about the fact that Standard & Poor's and others have downgraded the rating of the United States. The United States is no longer a AAA, while Germany is a AAA. And you might think that maybe, and I believe personally that the US is not going to go in default, so I'm not trying to go that far. The cost might change, but what will be the impact of the French situation? You probably have seen that for the fourth time, President Macron has changed prime minister, and it was always because he could not get the approval of the parliament of the measures that have to be taken to reduce the deficit and the budget deficit and the indebtedness of France. We might have an accident of France. Now, an accident of France is not peanuts. Today, if you buy 10-year sovereign bonds in France, you will get a better yield and therefore a better cost for France than even Italy. So France is something that we might not be paying attention, but what I'm trying to say is those elements go into a number of different areas and impact the sovereign risk. And I would like to say that even on the US side, we have to look at very closely the foreign holdings of US Treasuries. They are declining. And the question that everybody said, yeah, but there is no alternative to US Treasuries. And to a certain extent, that's true. But where did some of that money go? Well, central banks have sold US Treasuries to buy gold. Gold is not at 3,500 just because all of us have decided we wanted more gold. It's because central banks say that the only non-political investment today is gold. So that is the general problem of the debt, how it's going to impact the budget, and we will see what we come about, but I think we will be very close to $2 trillion of budget deficit in this country this year. So when you see that situation, when you see the uncertainty, the question of the interest rates becomes crucial. Now, we need always to remember one thing. The Federal Reserve is only affecting short-term rates. The Federal Reserve is not fixing rates for long-term bonds, even for 2-year bonds. And when you look at the interest rate, what do you see? Well, you see that the 1 and 2 years US Treasuries are above 4%. So there is no way the US bills or the interest rate can go much lower. And therefore, and again, it's controversial and I know it, I consider that the Fed is right to be careful. Because if we start putting those interest rates down, we are going to go back to 2022 and 2023, which is to create inflation and then have to create the problem. So there is no prospect, in my view, to see the short-term rates and definitely the long-term rates going below 4%. And so we should not speculate, even though the market on the short-term basis fluctuates, we should not consider that this is going, the landscape is going to change. And I'm trying to just to say that I am not a value investor, and therefore I am not smart enough to know whether I can play the US Treasuries between 2 years and 5 years and ever. Inflation will not decrease. We know already what the impact has been on inflation of the tariffs. But for the tariffs to really have their full effect on inflation, you need more time. Everybody knows it, everybody says it. And it's not because it has not increased sharply in the first months of the tariffs that it will not continue to increase. That in turn will reduce consumer spending because the prices will be too higher. And you know that the real engine of growth in the United States is consumer spending, is consumption. And that is, of course, what I see as the risk of stagflation. And to a certain extent, I consider that we might already be in stagflation. Where does that leave our favorite, which is the stock market? Well, the thing that fascinates me is that the stock market seems to react to basically nothing. You can have a war, you can have more bombs, you can have inflation, you can have interest rate. The stock market is going up. The stock market has become a supply and demand. And there are anomalies. Tesla trades at 200 times earnings, and General Motors trades at 9 times earnings. So where is the value proposition of Tesla in that particular case? Just on a particular, just from a financial standpoint. And then you are going to add maybe $1 trillion for Mr. Musk, additional to the 50 billion that you already got. You tell me what Tesla is as a stock. Among the Magnificent Seven, there are few stocks who will be much higher within 1 year. And therefore, the equity market as a whole will probably not increase substantially this year. And then if you start looking outside of the United States, I just want to take the example of Europe. The return on European stocks year to date expressed in US dollar is 21%. And I hate myself because even though I have some European investments, I miss Deutsche Bank because Deutsche Bank year to date in US dollar has increased 100%. And I assume that we all miss. So more than ever, and this will be my conclusion, we need rational thinking and analysis. We need not to be so influenced by what the media are claiming. We need more diversification in terms of countries, sectors, and companies. I think we will need to continue to be heavily involved in fixed income to protect our capital. We need to have a better horizontalization of our mindset look at, for instance, when you look at the electric vehicle, you have to look at what is happening in Germany, what's happening with Tesla, what's happening with the chips, what's happening in the US, what's happening in China, what's happening in Japan. It's a very, very complex equation. My view is that, and that's what I continue to do, I look at the valuation based on the fundamentals, and I don't follow the headlines. I am concerned about the earnings stream for one good reason. I am not capable, and again, it's my own limitation, to see what will be the return on the 1 trillion that has already been spent in AI, and when are we going to see anything like $200 billion of earnings? And because some of you, and certainly I am in the case, think that it's important, I also look at ethics, governance. I will never invest in Tesla for that reason, just to give you an example. Whatever the results are. But also I am very attentive on the impact that companies have on society and the broader world. I know it's not very popular at the moment, but it's one of the values that I believe in. Thank you very much.
I know there's a relationship, but a lot of my of the policy is that it's things going back to a state not equilibrium, but maybe entropy, right? Yes. So maybe I saw your point of view, Europe is undervalued right now. Like you're saying?
Europe is not undervalued if you look at the interest rates. You have to know that the German 10-year bonds have a 2% yield. The US 10-year bonds have a yield above 4%. So the multiplier on that basis. Now, from a corporate standpoint, I think that there has been, and it's something that as a European and an American living here, I never totally understand. There is a view that there is nothing you can expect from Europe. Nothing will happen. Well, there was just an acquisition that happened of a company in France, a major company in technology. And Apple wanted to buy it. And it was bought by ASML, which is a Dutch company. Europe is confronted with a real fundamental problem. It knows that it needs to reduce its dependency from the United States. Because the way, when the president changes, the way Europe is being treated is totally uneven. So Europe is doing that on the defense side. Europe is doing that on a number of areas. The EV, Tesla is there, but they don't sell well in Europe because Volkswagen, Renault, and others have their own EV, and they have better distribution system and so on. So what I'm trying to say is that what is considered here as a weakness of Europe is what Europe is. Europe is trying to be more inclusive, more congenial, and therefore you cannot maximize your profits and at the same time make sure the rest of society can follow. Here, we are all going in one direction. It's a different nature. So you have to know that you will never have the kind of resurgence of Europe in a brutal way, but what is happening, and I was there again a month ago, is a change of mind and a change of mindset in Europe that is certainly worth looking at, because they are, and by the way, I include the United Kingdom, there are opportunities there that have been uncovered, and there are really interesting investments in a country where interest rates are low.
But I think the tariffs on the UK are less than the rest of Europe, right?
Sorry?
The tariffs on the UK are less.
Yeah, because there was an early agreement and the tariffs are different. It's not going to be, it's 10% for the UK and 15%, I think, or 25. It's 15% for the UK and 25% for Europe. So there is a difference. One of the things that I find very interesting is what will happen in terms of how will the trade be redirected. Let me give you an example. Roche produces a certain drug that should have a tariff of 39%. However, it produces it also in the European Union. So if it uses its European Union operations to export to the United States, the same drug, it will only have the 25%. So there is a reorganization of international trade that is very spectacular at the moment. And we see it very much with China.
So what are your thoughts on France? I mean, I guess the government collapsed a couple of days ago.
Yeah, my view of France is that it does have a major problem. It has not had a budget surplus for the last 37 years. France has been living in Neverland and in illusions. And those like me who were making speeches, writing articles and so on, saying, be careful about the French that were treated as people who were coming with bad news, and bad news are never welcome. The reality is now they are really against the wall. In a sense, I don't see them going to the IMF for restructuring, but I think they will have to take measures that are going to be extremely unpopular, and so you can expect social unrest.
Which they're good at. And so the European Union, I'm going to say, was really formed to create, financial conservatism and stability with the original members, right? And then for Spain and Italy and Greece to join, Goldman Sachs wrote some forward-looking, financial instruments to say that they complied with a 3%, debt. Annual debt, right? Which they didn't, because once those contracts expired, their debt exploded, right? So the European Union, the debt has gone off the charts from its original charter.
No, yes, from the rules, yes.
That's what I'm saying.
It used to be 3%, it's 6%.
It was 3%, right?
But it's a lower percentage to GDP than the United States, and much lower.
I'm not arguing whether it's lower than the United States. What I'm saying is that it's off its charter.
The level of indebtedness is not as dangerous in Europe with the current interest rates than it is here. And that creates a stability, because one thing that is sometimes not seen, every year, every country has to give its budget to the European Union, who is taking and telling them what to do and what they need to do to continue to be in line with the principles. So there is a discipline that exists in Europe that we have not been used to, but that even Spain, Italy, and Greece are following.
So you think that within the next 10 to 20 years, the European Union will be stable and not break up?
That's too complicated, 10 to 20 years. What I'm going to try to see is that I do not see today elements that go so much off the chart that they represent a fundamental threat of immediate problem, except for the case of France. And if France is in difficulty, the ECB and all the other countries will have to rescue them, because nobody can afford within the European Union to have a financial crisis in France.
But France has a natural state because a lot of its economy depends on the African franc, right? Because they have this African franc, and they hold the gold of these African countries in their coffers.
Honestly, the dependency of France is on its own exports, and France is an exporting country, and therefore that maintains the balance of payment. But
they also have African gold in their.
They have done it by borrowing. The problem of France is its debt.
Do you think that Europe's reaction to the tariffs will be to penalize more the big seven companies from the United States? In other words, I mean, obviously they've had fines on Google and Apple, et cetera. Maybe they're going to forestall some of these mergers and acquisitions. They're going to put more limitations on the likes of Google and Facebook. I mean, it's been a lot of penalties that have been assigned to them, right?
Yes.
And then when you think about the challenge of robotics, AI-powered robotics to places like France. So like a great example is that the biggest employer in France are like truck drivers and taxi drivers. That's the biggest job, right? And if you're not going to have robo taxis taking over that, or there'll be tremendous disruption. And your thoughts?
I think that the reality is a little bit more complex. There is economic growth in Europe, which is lower than the US, but is still there. So in the current situation, as long as the debt doesn't go off the chart, Europe can remain stable and even better in the next 5 years.
Understood. I'm asking about the problem of Waymo taxis in Paris and Rome, where they've made Uber illegal.
Yes, but it's marginal, and you know it.
Well, I mean, when you live through rioting in Paris, it's not marginal, right?
For the
Right.
people who live there. Yes.
Correct. Right. So,
And we have on the 10th, which is what, tomorrow? Tomorrow there is the
Today's
10th
the 10th.
today.
yes.
So it is supposed to be a complete blocking of all the economy in France today. So we are going to find out how much it's followed and what will be the impact.
So you're saying there's going to be a shutdown?
Complete.
Wow.
Because the people will demonstrate and block the activity.
I mean, obviously you're European. You remember that when they opened up the channel and they started letting British drivers drive trucks through France, the truck drivers in France blocked all of the entranceways to the country.
And now the problem that they have is that having trucks going to Europe via France for the trucks is subject to all the formality of a non-EU member. And I think what is happening in Britain at the moment is a very strong push towards trying to repair some of the mistakes that existed in Brexit. And that will improve the situation.
Interesting, right.
You had a question there?
Yeah.
Manoj's very excellent presentation. You made a lot of great points, but there's something that seems to me, maybe you can help me, seems like a fundamental flaw. Your presentation is looking at current policy and how it's veered away from, say, the recent past history, or 20 to 50 years post-war, maybe, of, the model, and suggesting that's dangerous or not productive. But the point is, on the same token, like just for Marty's question, you cannot predict if the EU will be around in 10 years, for example. But more to the point, like when you talk toward the end of your presentation about the huge unsustainable deficit here, et cetera, the flaw as I see it is you accept the recent past, the post-war, like that's your baseline. And you're looking at, say, the Trump administration and, the breakaway from that baseline as a negative. But that baseline, okay, that you're worshiping has brought us an unsustainable debt, okay, has brought us a migration problem in Europe, which is putting stress on several countries that may totally shift them into a completely different world, okay, in 4 or 5 years, or I'm not a forecaster. It's bringing down governments. So it leads to stress on NATO because the model that you're worshiping, the Europeans have been deadbeats in supporting NATO. They send billions of dollars to Putin to buy oil. They supported the pipeline with Russia. So they want the US to help them with Ukraine, but they're sending all the money, billions of dollars to Russia. So I know it's a very complicated situation, but where I see the flaw is you don't go behind the baseline to look at was the baseline correct? And you seem to acknowledge that the baseline has brought us all these problems, but you're extremely critical of breaking away from the baseline. So that's just my comment.
You are perfectly right. And that's another subject that I haven't gone into because my subject was the tariffs and what is happening now. I am hugely concerned about the geopolitical situation. I mean, what happened in Qatar yesterday, just to give an example, or the drones that have been sent by Russia on Kiev and things like that, they are not there to disappear. We have a huge geopolitical instability at the moment, but it was outside of the scope of my speech.
Oh, you're welcome to comment on it.
I think that the solution to the Ukraine problem is clear. The problem is that Ukraine doesn't want.
What is your solution? You said it's clear. What is it?
It's clear because there has to be a new order, defining the borders and accepting that there will be some elements that will contain any attempt by Russia to do it again in Ukraine. The Russians are telling you, you take my territory, and by the way, we are going to start bombing you if you send troops to Ukraine to defend Ukraine so that the contract can be maintained. That doesn't fly. So the reality is that it's a territorial advantage. The problem of the Middle East is a much bigger problem because the notion that we will eliminate Gaza and have 2 million people going somewhere in Neverland doesn't fly. So there is no solution today that is on the table. The only thing that I hope is that we will soon have all the hostages out so that we can start another discussion. Until that is done, Netanyahu can do basically everything he wants. And he doesn't. And therefore, it doesn't make the solution possible. So the notion of a ceasefire, I mean, the Alaska meeting and the notion of a ceasefire was just impossible to accept for Putin. Putin does not want to stop the war. Yeah.
Oil facilities, so he could generate any revenue financing war would be over.
Yes.
I'm sorry, you're saying if Europe had bombed Russia?
Yeah.
Well, yeah. But
I think
I think there's a little bit of a outcome from that.
I think the problem is not just Europe. The involvement of NATO is much bigger than it looks. I don't know if you know that the weapons that are going to be sent from the US to Ukraine will go via NATO and paid by the Europeans. But the weapons are going to go there. So the reality is that nobody has wanted to take the risk of a nuclear confrontation with Russia. And that is really, it's not a red line. It's a war that we should never take as a risk. I mean, this would kill all of us. So I think that bombing Europe could not do, or the US for that matter, could not attack Russia just because they did it. The reality is that, yeah, sorry. There has been a series of measures that have been taken, particularly by Europe, and not so much by the United States, that have been blocking the flow of funds from Russia in a number of ways, and the Europeans have been buying more US oil and less Russian oil, and you can see that the problem of the Russian economy at the moment is becoming very complex because they don't have the money to do that, and they have transformed the economy into a defense economy. But the rest of Russia doesn't work as well as we think. But the reality is that the notion that we would go at war with Russia was off the table, and my opinion, rightly so.
So I would say that 80% of Americans would like to pull out of NATO. Just, I'm being conservative because I think most Americans are tired of foreign wars, and we'd rather have the money spent in the United States.
That is part of something that I hear, and I am going to give you the fact. The procurement of the army of NATO, that is, and all the things that are in Europe, comes where? It comes from the United States.
Understood, right? American,
80%
yes.
of the equipment that NATO has is from the US defense industry. So when Mr. Trump talks about the percentage that they don't do their work, it's on the domestic side. But on the NATO side, you have to know that at the end of the day, NATO is a huge money machine for the US defense industry. And I don't see any president confronting the US defense industry anytime soon.
Understood. Military industrial complex. Are there other questions on that side?
Oh, one back here. It's a different topic.
Yes, please.
So changing gears. So we're facing a huge aging population in our developed countries. Like the age, so many of us are getting older. And so from an economic standpoint related to workforce and technology and all that, what are your thoughts on how we're dealing with the healthcare, all the implications around the fact that in developed worlds, people are aging, whereas in the undeveloped countries, they have all the youth?
India, for example.
Aging. The gray hair I have.
I'm part of it. The aging population is a clear result of the post-war situation, where there is
Sorry, what situation?
post-war situation. There has been a huge baby boom, and what is happening is that that baby boom is actually dying just because of age. So when you look at the demographics with a long-term view, and when I'm talking long-term, I'm talking 10 to 20 years, even with immigration, the population is going to go down. And we are not being overwhelmed by that. But the cost of taking care of the elderly is both a social and a financial problem. I won't go into the social one because it's obvious, but on the financial side, we have to remember one thing is that the money that has been earned by my generation has also been served as financing social security and healthcare. So the question is, you need to find a balance. But the reality is that we have to stop think the health of the elderly people in danger and of the other people, by the way, and this is another subject, but if you start looking at what's happening on the RFK side, it's pretty frightening, no?
Are there other questions on the other side? Again, I just want to get back to the whole theme of entropy, which is that there's a perception in America that we're involved in too many things. And
You are.
There's a desire to pull back.
Absolutely, you are. But I'm going to be pretty harsh, okay?
Please.
The United States needs wars to survive. The United States has been at war since World War II, everywhere you can imagine, and they have answered to political problems very often with wars, which is a cost. I think that, strangely enough, the first president who said we are in too many places was Barack Obama. And I think that the United States does not need the role, I believe, the way I see it, the role of the United States as the custodian of the entire world is over. First, because the US doesn't want it, and I think rightly so. And second, because even when the US intervened, it makes things sometimes worse than it is. So in that particular case, what I agree with is that clearly we have to pick our battle and not just go. And when you hear that we are now sending a ship and maybe bombs on Venezuela, what the heck are we doing there? What the heck are we doing to use the army to resolve a problem of the amphetamines or whatever in Venezuela? Give me a break. And we continue to add. And that's what frightens me. We should absolutely reduce our intervention where it is critical for the world peace and for ourselves.
And then just let China take over in many countries?
China is not going to take over the countries. China is not a country that takes over. China is a country that makes deals. Biden said something very smart. He said, China is a competitor, Russia is an enemy. And I think it's proved right. Competing with China is perfectly feasible. Okay, do we need to put tariffs on agriculture in China to resolve the fact that we don't have the chips and they have more chips, or because it's in Taiwan, semiconductor or whatever? Give me a break. Question is that what we want to do? I think what we are doing now, which is smart, is we are trying to create our own chip industry, or we are trying to get chips also from Europe rather than from China. I think it's a huge competitive battle on the trade side, but we should do it as a trade war, not as a war.
I think China builds infrastructure all around the world, and then it lends people money to build it. Those people default, like in Africa and South America, and China ends up owning that infrastructure.
When I was in China about a year ago, something happened that has not been noticed. Xi Jinping made a very good speech about the future of what at an African summit, and he said, we are no longer doing what we were doing. And there are two reasons for that. The first thing is because there were problems on site. But the second one was also that, as you said, they found out that some of the people they've been lending money to will never repay them. And the whole issue of emerging market debt that the Chinese have tried to avoid, they are now fully in. So they are saying we are only going to work on a project basis. And they created a bank for that, and they gave themselves financial means. The manpower of China is going mostly into some Asian countries and Africa at the moment. Very little in Latin America, and certainly not in the Western world. But it's true that China has an ability to influence. And when I was in China many years ago, when Xi Jinping was nominated, he made a very clear statement about their policy. We are not trying to take over the world. We are there because we do not want to have disturbance inside the Asian country. And that was a clear note on the North Korea. And therefore, they are containing that. That's what they want to do. That's their continent. And in the international arena, they are going to be strong. And we know that technologically, sometimes they are ahead of the game. And that's a new world, because now all of a sudden, they are trying to defend intellectual property. Because all of a sudden, they do have intellectual property that they don't want to be taken over. So China, on the other side, is financially weak. And therefore, its means to throw money at the rest of the world is very limited. And you have followed, I'm sure, the real estate crisis that happened there. The current problem of China is a domestic problem, and they haven't fixed it yet.
Time for one last question. What does anybody have a question? Because I'll ask the last one if not. What are your thoughts on the global south?
Two things. The first thing, you have the BRICS, which is the global south getting together, and they want to be away from the dollar and all those kind of things. Nice. I don't have any problem with the fact that they are doing it. The US might have it, but fundamentally, they are now working together on the global south. And they are telling us that there are a lot of problems that they can resolve without the West, including Europe, being involved. And so what is happening at the moment is that the global south is maturing. The global south is 47% of the world population. So and we are losing demography. So it's a complete change of landscape. That's where you have to project yourself. What would be the population 20, 25 years from now? And we know it because those who are going to be 25 in 25 years are already born today. So we know how many there are. We can count it, we can project it. And we know it's going to be a very different population spectrum and the global stuff. But the last thing I would like to say, despite everything that I told you, if you believe that India, China, and Japan have the same agenda, then you might be surprised, because while they have this united front vis-a-vis the external quote-unquote enemy, when it comes to the internal situation, they are not on the same page.
Any other questions? Closing remarks? You want to give us 30 seconds? And where can we find you?
You can find me, I have an office in New York, but fundamentally the best solution is to go to my email address, and I'll make sure that you can circulate it. And I'm more than willing to continue the conversation any way you want.
Hey, we'd love to have you for a fireside chat sometime.
With pleasure.
Fantastic. Great. Great job.
Thank you.